Hey, Alpha fam. Welcome back to another episode of Alpha Commission. Today on Alpha Commission, of course, we're just going to continue our coverage of the green on the board. Of course, all of these coins are looking extremely good these days. We're just continuing to get to see those pumps on almost everything across the board, and we're also getting quite a good amount of green on stocks, a little bit of red creeping up, especially in energy, but that's not necessarily a bad thing in terms of inflation and in terms of the expectation of the Fed increasing rates, because of course we'd like to see some of that core inflation coming down, such as food and energy, especially. And it could incentivize the Fed to consider that there may be some economic pressures on us that would diminish the chance for them to perhaps increase rates by 100 basis points as opposed to the expected 75 basis points. One of those pressures could be that it looks like we're starting to cut jobs a little bit faster than what they projected, and also manufacturing is down significantly, or at least the manufacturing index. So, based upon these metrics, the Fed may decide that it's been a little bit strong on the market and it may not need to go stronger. Maybe the market conditions getting to be turning a little bit negative are going to take care of inflation, at least partially, on the Fed's behalf, uh, being that a recession essentially is the solution to hyperinflation, right? That's how the problem is, of course, if the Fed increases rates too hard, then we can get into a mega recession. But if they don't increase rates enough, then of course we continue with a hyperinflation, and the mix of both of it is a stagflation, and so it's very very hard to parse through all of this. That's why a lot of the market is not 100% certain what the Fed is going to do. But based on a political bias, we can suspect that they might just go with a 75 basis points, and the market would probably use that chance to have a summer rally, especially due to the midterm elections period coming up, and then maybe reevaluate come fall or winter, when we have Q3 earnings having fully reported. Now, right now, of course, we're looking at Q2 earnings, quarter two of the year, but that's going to be a mixed bag, and so there is a good chance that the bottom of the market doesn't really come along until maybe September or into Q4 at the end of the year, maybe even Q1 of 2023, if the recession, ends up being a strong recession as opposed to just kind of like a small, really kind of mild recession, then perhaps, the numbers of Q4 could actually impact um, some of the evaluations of stock prices that could bring the stock market down, which would in turn likely bring crypto down as well, right? So, guys, we're juggling multiple things here right now, and you really have to stay focused on all of it. That's why a lot of us are a little bit of nervous Nellies when it comes to preserving capital. And so, a few of us are a little bit flinchy sometimes when we could be just celebrating the green on the board. But you guys have to remember that anything could go wrong and just send us plummeting, right? Just anything could go wrong. We're in a very fine balance. We're pretty high up there in terms of pumping. This is Ethereum's chart, and so we're getting into those risky areas if anyone's buying in here. And if you bought along with me, along with the lows, right, when Bitcoin was at its lows here and had confirmation of lows, then of course you're wanting to take your profits. The market is starting to get tempted to take its profits and to de-risk, right? And that's when that that happens, then what you can see is some type of major retracement, especially as these pivotal risky moments start coming up, like the Federal Reserve's possible decision, which could just tank the market. And so you may see some people or some segments of the market try to front run that. On the other hand, they may have assumptions based upon that political bias, which maybe would lend them to actually putting more into market. So we're just not sure. And then, of course, we have everything with the euro and the Japanese yen and all these baskets of currencies that the dollar is measured against, and so the dollar is getting super hyper bullish, right? And the market really cannot rebound without the pressure of the dollar decreasing. And so while the dollar, because of this basket of, foreign currencies is in chaos, if the dollar it continues to spike, that's also going to suppress the markets. So a lot of volatility in a lot of different segments of the market. We haven't even talked about Russia or any of that stuff like supply chains in China, any of that stuff. But you guys understand, like we have our hands full of problems, and yet we are getting these pumps, this kind of relief rally on the charts here. Now, one thing that I'd like to point out to you, which is what I was showing a friend of mine about a week ago, is I was saying, look, a 718, look, the 10 and the 200 weekly on ETH, it's like a dream setup. A lot of things are going to pump and front run that potential crossing. Of course, if Ethereum crosses it, it has a potential to just have a huge pump itself. And so this is like a really dream setup that we had here, especially when we crossed that 10 MA on the weekly. We just pumped along with that 5, just pressuring it up. Of course, we had this limitation here at 1550 because you can see that's exactly where the 10 EMA is. And then we had some resistance there around approximately 1600 because that was where the 200 EMA is. And now that we've just broken through that 200 EMA, just today, actually, I mean, really solidly broken through it. And if we can confirm that we're above that, there is the potential for that squeeze again, like, you know, to be reasonable, we have resistance in that 1700 area. So, it could get a little bit choppy, a little bit dicey up until, 1700. But then there really is a true possibility that we could get into that 1900 to perhaps 2000 area and actually, most likely get rejected in that area. So, guys, just be open-minded to these pumps still. Of course, the 200 EMA was a place where we could have gotten rejected from. This is a very powerful moving average, just like the 200 moving average is a very powerful moving average. And so being on top of the 10, being on top of the 200 MA, and being on top of the 200 EMA are very bullish signs, and we could have gotten slapped down here very easily, guys, okay? And we still have a chance to get slapped down in this area. You can see a lot of EMAs in this area, okay? So just based on EMA theory, we're gonna be coming up to a lot of resistance. Of course, we also have our horizontals. You can see this area, right, got rejected straight down. You can see a lot of wicks over here, a lot of, just the support can be flipped into resistance pretty easily, and we also have these wicks and these candles over here. So there is the chance that we just get rejected after maybe one more push up, right? So again, this could be a dream setup, or it's just that we're facing so much overhead that maybe it's just burnt out. And if we look at Ethereum on the weekly, of course, we do have a nice curve just continuing to move up, which did result in a pretty sizable move the last time we had that setup. We also have, very similar lows as we did. But one thing that I would like to point out is just like we pushed up here, right? When we reached our limit, we got slapped down pretty badly and we took out our lows, right? So we might consider that this was that kind of action right there. and maybe this was our confirmation of a bottom. But just to be aware that there is a a higher time frame possibility of us having this longer kind of months long period where we get just slapped down in this area and then maybe make a W and then we push up, right? And then we get that push, and that would, that would create some type of confirmation, on the charts for the RSI as well for those kind of weeklies and things. And one thing we might point out here on Ethereum is that we do have the money flow just skyrocketing, which is good, but we also have the ADX coming down. So there may be a limitation on this move, at least for right now, for like whatever the next thrust is going to be. There may be a limitation on it, perhaps that 1700 zone that I was talking about, right? Um, but really, we want to see the ADX turning up with the money flow. We don't want to see them, looking to meet each other, this green line and this pink line, okay? But the green line is going to cross that red line if we continue with a significant ADX, if the ADX doesn't just drop. Even though our RSI is getting a little bit, overbought, um, again, suggesting there could be a limit on this move. But if we do get that cross on the money flow, I mean, it's just likely to be a very powerful pump, whatever happens. So let's look forward to that with Ethereum. Jumping over to Bitcoin. Of course, we do have very similar setups. It's just that Bitcoin is a little bit earlier in it, so this was definitely an Ethereum-led rally. You can see my color-coded lines here, right? So I have the 200 MA, the 200 EMA, the 20 EMA, and then the 9 EMA over here, this red line. Getting on top of that 9 is going to be very bullish for crypto. Of course, if we drop down to the daily, let me just remove these EMAs just to clean up the chart a little bit and zoom in a bit so we're not just totally overwhelmed. You can see the levels that we're talking about. We did have that massive drop, right? That kind of broke a little bit of the structure. It it dipped its toe into this kind of uptrend that we had. Maybe if I go to let's just put on the 30-minute. Let's get a lot of detail here. All right. You saw this price action just drop dramatically and dip its toe here. It did catch it on this this kind of sloppy diagonal support area, and then it was able to push above and recapture that support, but and also recapture the weekly 200 MA, which meant that it really stayed bullish, guys. Like this thing did its job, and that was a perfect buyback in point, to be honest, in my opinion, just because it did recapture the 200 MA and proved it to be support, as well as flipping this resistance into support. So if you missed those episodes, there was one where I made a 5-minute update, and I was getting a little bit worried about that this could potentially break down to these lower levels, but this zone did hold. And of course, there's a reason why I make this zone, because this is the bullish zone. As long as we stay within this zone, each level that we violate that I've marked out here, our support becomes weaker and weaker and weaker, and ultimately we don't want to break this bottom one, and we probably don't want to break this green zone. So I mark it out in green because that's kind of like your last line of defense, and then you're really testing your fate if you break below that. But yeah, guys, everything still looks pretty good. There is some concern, of course, that we could just not break above the 9 EMA, that kind of 10 EMA weekly zone. And that would look pretty bad for crypto. It would just suggest that, what if we just got up here and we just make a little bit of a lower high? What if we just what if we just double top? We just can't do it, right? Then potentially we could have a pullback, that could end up being pretty deep. Okay, so a zone that I would think just would be reasonable to target if we do end up being slapped down, just like this, just something like this would be anywhere from here, you know, to even perhaps this area or this kind of area. So really that whole 14 to 20,000 zone could be in play if we do get just a hard rejection on Bitcoin in particular for whatever reason. And that would be a confirmation of our low. Right, so this would actually be fairly bullish. It may sound bearish, but it would actually be pretty bullish if we were able to just catch one of these supports and confirm our low. Ideally, we would do that with some type of bullish divergence, on the RSI, where let's just say that we topped out in this area and we put in some type of bearish divergence, and then of course price just could dramatically drop down, but then we put in some bullish divergence or something, right? We kind of even though our price goes lower perhaps on the charts, right? Let's say that we either double bottom around 17,500 or perhaps 16,500 or perhaps even 14,000, right? But we end up keeping our RSI above this level, above this 20 level on the daily, then we're going to end up putting in bullish divergence, which could then perhaps signal that that was the bottom of the market, right? And so maybe we can just go from there. That kind of confirmation would be really beneficial for the psychology of the market, and it could come with perhaps the Fed, doing something like a 100 basis points increase, right? Like if the Fed just comes out, and let's say that we get, because of how bullish Ethereum is, let's say that Ethereum just drives us up and we reach our $26,000 target, right? Like just taking out this candle, basically, just taking out this kind of institutional candle here. And then we're kind of hanging out in this area. It's the 200 EMA. It's pretty hard to break through that. Ethereum's at its resistance, fighting a lot of resistance. All of that momentum is starting to be lost because we're getting into this kind of like, kind of resistant area. We're bumping our head on all that potential resistance. Then, the market could decide to come back down. And by then, maybe the Fed has made a decision of 100 basis points and the market just kind of crashes down, something that could be pretty traumatic, like maybe 30%, 35% even, which, it's possible. It's very possible. So just to be aware of what could be coming up. It's not like we just have to go up forever to heaven. And we really haven't confirmed a bottom on this chart yet. So at some point, whether it's after a run or whether it's being smacked down by the Fed or whether it's just by resistance pushing us down and market pressure and kind of, volatile market conditions, we still have to confirm a bottom to this market somewhere, right? Somewhere. And we just haven't done it yet, to be honest. On a smaller time frame, one thing that we didn't really do is we didn't really, check back here. So if we did have some type of check back like this, maybe to 22,700, 22,800. I wouldn't see that as bearish. It would just be like rechecking this candle. So, guys, I think I'm going to, basically wrap it up there. We do have, of course, the DX why it continues to just pump up that trend line that I did designate a couple days ago after that double bottom was put in. So that is something that we have going against us and could add to pressure to the downside. Of course, we also have the VIX losing to the downside, which is actually a good thing for prices. And let's see, USDT dominance also coming down, so that's good. So 2 out of 3 on our side. We'll see how it goes, and hopefully we can just continue with a bit more of a push to the upside. If not, look for maybe a temporary pullback, and I wouldn't really worry too much unless we start violating this $22,000 zone, and definitely the bottom line is here around 21,700. That was your alpha for the day. Stay safe and happy trading.